Hello, my name is Susan Graham. I'm a certified elder law attorney, and I want to talk to you today about tax traps that exist with IRA or retirement account beneficiary designations. The law has changed. Now, when someone dies and they have a retirement account and they pass that on to someone else, it's called an inherited, I'm going to call it IRA for all those retirement accounts. That person now has to pay the tax within 10 years of the death of the owner. And if you're naming a human, it's a 10-year span. But if it's somebody that's not a human, a spouse, a child, a neighbor, a niece, a nephew, a brother, a sister, whomever you want as a human, if you don't have a human, then the tax is accelerated and it has to be paid within at least 5 years. So if you don't have anybody or the people you've listed have died before you, then what will happen is that money will go to your estate. And when the funds go to your estate, they have to be paid within a shorter time period, within at least 5 years. You can avoid this by actually having people that you identify, humans. But what happens if you don't? Then the company has a default provision of where it goes. And currently, almost all those companies say it's an estate. I just received a flyer from the company that handles my retirement account, and they said they're changing their default provision to have it not go to the estate, but to first go to a spouse, should I have a spouse, then if there's no spouse, to my children, if I have children, and then ultimately to my estate. Well, that's kind of a nice broad sweep for people, but that really doesn't fit for most. And do you really want it to go to your children equally? And what if one of them predeceases you? It only goes to the surviving 2 children. If you had 3, that means you've left out one family totally. So my recommendation is look at who the beneficiary designations are right now on your retirement accounts, and then consult with a professional, someone like me, to see if that's the right beneficiary designation and does that fit into your entire estate plan. I have a business called Senior Edge Legal, and in my business, we focus on people who are retired or those who are anticipating retirement. And most of my clients want to include in their estate plan not only protecting their independence during the remainder of their life, but also dealing with issues if they should become incompetent and when they die. They want to not only protect their independence, but their assets and their families in that plan. If you would like to talk with me and set up an appointment to look at your own circumstances, call my office, 208-344-0375. That's 208-344-0375. And you'll speak with one of the lovely people who work for me. They'll ask you a few questions about your needs and then also figure out if we have a potential to be a good fit. If so, there's no charge for that first 30 minutes of a meeting with me. Thank you so much for letting me share this information with you about the tax traps of IRA and other retirement beneficiary designations. Thank you.